If you want to get financially ahead in 2026, this video is for you. The economy doesn't look like it did 5 or 10 years ago. Interest rates have changed drastically. AI is reshaping entire industries. The cost of housing, food, and healthcare have skyrocketed. And a lot of the financial advice floating around online is still based on an outdated playbook. But guess what? The people who are actually getting ahead financially right now aren't doing anything complicated. They're not chasing viral stock tips and they're not day trading all day. And they're definitely not waiting for the perfect time to start. Instead, they're focusing on a handful of strategies that consistently move their finances forward. And most people completely overlook them. In this video, we're going to walk through the 5 most useful financial tips to get financially ahead in 2026. These are practical moves that can start improving your financial position almost immediately. And pay close attention to tip number 3, because this is the one that quietly costs the average person thousands of dollars over time. Let's get right into it with the first tip. One of the easiest ways to get financially ahead is to put your cash in the right places. In other words, where your savings account is matters. If your emergency fund is sitting in a traditional checkings account earning almost nothing, inflation is literally slowly eroding its value. And in 2026, there's really no reason that your savings is sitting in an account that doesn't pay you at least 4% in interest annually. Banks have been promoting high-yield savings accounts that pay dramatically higher interest rates than traditional banks. The difference is 4% as compared to 0.01%. Let's look at a quick example. Imagine you have $20,000 saved for emergencies. In a traditional savings account earning 0.01%, that money might earn around $2 a year. But in a high-yield savings account earning around 4.5%, that same money could generate close to $900 per year. That's a nearly $900 difference just from choosing a better place to store your savings. No investing required, no risk involved, just a smarter setup. If your goal is to get financially ahead, your first move should be making sure your money is working as efficiently as possible. Look for savings accounts that are FDIC insured, no monthly fees, no minimum balance requirements, and competitive interest rates. It usually takes less than 20 minutes to open and move your savings. Banks like SoFi, American Express, and Chase have offerings available. Just remember one thing. Don't get caught constantly chasing the absolute highest interest rate. Pick a strong account, set it up, and move on to bigger financial moves. The next financial tip in 2026 is to automate your financial life. Here's a simple truth about money. Most people don't struggle financially because they lack knowledge. They struggle because they rely on willpower. They tell themselves they'll save more next month. They plan to invest when things feel more stable. And they hope they'll be more disciplined later. But discipline is unreliable. But automation is powerful. If you want to get financially ahead, you need systems that move your money automatically. A simple automated setup might look like this. Your paycheck hits your checking account. Within 24 hours, a percentage automatically transfers to savings. Another portion automatically goes into investments. Your credit cards automatically pay the full balance every month, and any debt payments are scheduled right after payday. At that point, the decision to save or invest is no longer something you debate every month. It simply happens. This strategy is often called paying yourself first, and it works because saving becomes the default and is priority over unnecessary spending. If you've ever told yourself you'll save whatever money is left at the end of the month, you already know the problem. There's almost never anything left. The people who get financially ahead don't rely on motivation. They build automated systems that do the work for them. Financial tip number 3 to get ahead in 2026 is to treat taxes like a strategy instead of a chore. This is the financial tip that most people ignore, even those that are highly educated, and ironically, it's often the one that makes the biggest difference. Taxes are likely your largest annual expense, yet most people spend almost no time thinking about how to reduce them, almost as if you have no control that Uncle Sam is going to take a cut of your money. Every year they open tax software, upload their documents, file their return, and move on. But that's not tax planning. That's simply reporting what already happened. The people who get financially ahead approach taxes differently and they strategize. They think about taxes before the year ends. Here are a few examples. First, tax-advantaged accounts. If you're investing money in a regular brokerage account before contributing to accounts like a 401k, IRA, or HSA, you could be missing out on significant tax benefits. Traditional 401k contributions reduce your taxable income dollar for dollar. Depending on your tax bracket, that can act like an instant return before the money is even invested. Second, capital gains timing. Investments held longer than 1 year are typically taxed at lower long-term capital gains rates. But if you sell them earlier, the profits may be taxed at higher ordinary income rates. That difference can add up dramatically over a lifetime of investing. And third, if you have a side business or rental property, working with a knowledgeable accountant can uncover deductions most people never realize exist. A tax strategy isn't about avoiding taxes illegally. It's about understanding the system well enough to use the tools available. And over time, those savings can accelerate your path toward financial independence. Financial tip number 4 is to keep investing with a simple strategy, and that is on index funds. One of the fastest ways people fall behind financially is by trying to get rich too quickly, by making speculative bets that end up hurting you. They chase hot stock tips on Reddit. They jump into options trading. They follow every new investment trend they see online. But history shows something surprising. Over long periods of time, the majority of professional fund managers fail to outperform simple index funds. Even the experts on Wall Street will not admit to you that they almost always lose to regular index funds. These are people with teams of analysts and powerful research tools. Take it from me, who used to work on Wall Street. If beating the market consistently is difficult for them, it's extremely difficult for the average investor that does not do it full time and with all the best research tools. This is why many long-term investors rely on a simple strategy. Invest consistently in low-cost index funds that track broad sections of the market. For example, a total US market fund, an international stock fund, and possibly a bond fund depending on your risk tolerance. The strategy isn't flashy, but it works because it focuses on consistency. Markets go up, markets go down. But over long periods of time, diversified investments have historically grown alongside the global economy. Getting financially ahead often means resisting the urge to overcomplicate things. Sometimes the smartest investment strategy is the one that feels a little boring. And lastly, the last financial tip in this video is to build more than one income stream. For a long time, like for your parents, the traditional financial model looked simple. Get a job, work hard, and climb the career ladder. But today, the modern economy has made something clear. Relying on a single income stream can be very risky. Companies restructure, industries change, technology disrupts entire fields. And when that happens, a single paycheck suddenly feels fragile. That's why many financially successful people focus on building multiple income streams. This doesn't mean quitting your job tomorrow. It simply means creating additional ways for money to come in. Some common examples include rental income from real estate, dividend-paying investments, freelance or consulting work, online businesses or digital products, and online content creation. Even an extra few $100s per month can make a big difference. It increases your savings rate. It reduces financial stress, and over time, it can grow into something much larger. Every additional income stream becomes another layer of financial stability, and another step toward getting financially ahead. All right, so wrapping up, I just want to leave you with a few last words to help you start getting ahead of your peers financially in 2026. If you step back, the path to getting financially ahead in 2026 is not complicated, but it does require intention. Put your savings in accounts that actually earn interest. Automate your finances so progress happens automatically. Think about taxes strategically. Invest consistently in diversified index funds and start building income streams beyond your primary job. None of these strategies require a finance degree. None of them require perfect timing. They simply require starting. Because the people who get financially ahead aren't the ones waiting for the perfect moment. They're the ones who start small, stay consistent, and keep going. And to help my viewers start on building their own rich life, I've provided a free personal finance tracker, and I put the link to it in the description below. Because when money gets tracked, it gets managed. And this is the first step to building wealth. So please do me a favor and gently tap the like and subscribe button to get more great financial tips to help your pocket. If you want more videos like this that help you build smarter financial habits, here are 2 other videos to see where you land financially against your peers.